Welcome back to the Dividend Diplomats YouTube channel. Bert is doing the You Can't See Me, John B over there. And guys, we're here to talk to you about two dividend stocks I'm watching heading into July 2022.
Before we get into it, while you're listening to us talk about these stocks, if you haven't already, subscribe to our channel, hit that button below, give this video a thumbs up, turn those notifications on, and guys, everybody, swag time. Don't forget about that Diplomat swag. We got the t-shirts, the coffee mugs, the stickers, the water bottles, I said t-shirts already. We got sweatshirts if you, for some reason, are cold this summertime, because it sure isn't cold around here. Everyone check the store out. Do some shopping while you're listening to Lanny talk about what stocks he's going to be shopping for in the coming weeks.
And guys, please keep a price check on inflation on our price of goods. No, but seriously, guys, I know things have still been pretty wild here, heading into the end of June. Obviously the stock market has still been pretty shaky. Granted, they just finished off on a decent note within, the S&P 500. But again, the S&P 500 is still down. Granted, it's down now less than 20% year to date, a little bit over 18%. Obviously, we're still dealing with record inflation, even though they're trying to now help out at the pump by pausing the federal and state taxes on the price of gas. I know I did see that, okay, instead of being $5.10, it's now about $4.90. So let us know in the comments if you're seeing the impact of that already.
Yeah, I mean, I guess every dollar, every penny counts right now, especially with gas this high. You see the tweets out there that say it costs what, $75, $80, $100 plus to fill up your car. It sucks right now. I mean, it's just not fun. That being said, it was interesting that the market was pretty positive this week, Laney, and quad below negative 20% year to date. Interesting.
Very interesting.
Yeah, it's getting close to 4,000 again. Still a far cry from that 52-week high. But you know what we haven't stopped doing, Lanny, here since the market's been dropping in 2022?
Looking for dividend stocks. We keep doing it regardless of what's going on in the stock market because we believe you shouldn't be timing the market and you can always find undervalued, high quality dividend stocks to buy in good times and bad times, especially during this time, because some of these times are the best times for dividend investors.
And we always find these dividend stocks using the famous patent pending, trademark licking Dividend Diplomats dividend stock screener using not one, not two, but three simple metrics and a bonus metric. 1, PE ratio less than the S&P 500. 2, dividend payout ratio less than 60%. Perfect payout ratio is 40 to 60%. And 3, that dividend growth history, where we usually look at the 5-year average dividend growth rate and that how long they've increased that dividend. And then Lanny, when we make it through those first 3, tell us what is that bonus metric we check out?
We look at the dividend yield. And for those that may not know about the dividend yield, again, this is how much you are going to be paid from owning a share of stock. If the dividend yield is 3% and the stock price is $100, you'll get paid $3 per year from that company. So, if they pass the metrics, we look at the yield because that's the passive income that you're going to receive from owning the dividend stock. But yeah, go ahead, Bert.
I was going to say, I'm very excited for these two companies you have put together. They both perform well in our stock screener, as you're going to see. One of them has not been on your watch list or talked about in our YouTube channel for quite some time. We've talked about them before. We both own this company. We just haven't featured them. So I'm very excited to talk about that one. And the other one is one that you've been very hot on the trail about.
Very hot on the trail. And guys, I usually come out with at least 3 dividend stocks, but this time I only have 2 right now on the list. Some stocks actually just probably a day or 2 before I kind of wrapped it up, I actually had to drop a stock just because there was a little bit of too much performance was happening. And it kind of fell out of what I like.
If you think Lanny's losing his touch, let us know in the comment section below. If you're mad that he's not having 3 stocks, he only has 2 here, let us know down there.
Let me know, and I'll meet you in the parking lot. But yeah, let's get into this. This is the first company here, guys, Ohio-based No, it's not Bert's favorite Columbus base, but we're going down to Cincinnati. This place has.
Some would argue that some would argue that it's headquartered in Kentucky if it's headquartered in Cincinnati.
Hey, you could do push-ups. Feet are in Kentucky and your hands are in Southern Ohio. But this stock is actually up year to date, guys. I know. Pick your jaw up. Gasp a little bit.
What?
Yeah, this stock is actually up over 7% year to date, guys. In fact, over the last 52 weeks, they're actually up 23.5%, but for good reason, Bert. And let's just hit them first with the big news. What was the big news this past week?
We'll hit them here with the big news, Lanny. This company didn't announce a 1% dividend increase. They didn't announce a 2% dividend increase. They announced a 24% dividend increase. That quarterly dividend increased from 21 cents to 26 cents. Lanny, that company is
Kroger Company, guys. Ticker symbol KR. Again, I couldn't take KO because of Coke, but this is definitely the knockout stock right now who's been performing very, very well. I mean, first, when they released their earnings, sales were up $3 billion Q1 versus Q1. Net income was crushing it, up over 500 million. So the stock price has been carrying with it, and they're rewarding shareholders right now, especially beating the highest rate of inflation we have ever seen, which is at 8.6%, hence the 24% dividend increase to the stock here.
This stock has been on fire since the start of the pandemic. We bought them a long time ago, and they were right around 21. They took a beating like 5 or 6 years ago. Their stock price tumbled to $21 per share. Now it is just crushing it. They're expanding. They've made it easier for people during the pandemic. They're really appealing. And as you highlighted at the very beginning of this, Lanny, the results are reflecting in the earnings release with that growth in revenue and net income. It's crazy that they've doubled since we purchased them, more than doubled actually, now that they're at 48.45.
Yeah, I mean, but guys, the question is, don't worry about that, because if earnings has grown over that time period, if the dividend has grown over that time period, let's look at the metrics right now. So guys, we're going to dive in. Bert, you want to hit them with that first price to earnings ratio metric, my man?
48.45 is the share price. EPS is $3.91. The PE ratio of 12.39x.
And that compares pretty favorably. The S&P is trading at around 20 times earnings. So again, you're getting a pretty good discount here.
Payout ratio number 2, annual dividend after that increase is $1.04. Divide that by the 391. That's a low payout ratio of 26.60%.
I mean, guys, this is a very good payout ratio. Helps you sleep at night. Yeah. It helps them pivot, though, helps them stay kind of cutting edge. They're usually one of the more earlier adopters within the grocery store, supermarket space. So, they're reinvesting back into the business by about 73% of revenue or income going back to their business. So, and it keeps them able to increase that dividend, which is that third metric, Bert. 15 years of increases.
Dang. 15 increases. You said it earlier, earnings are growing. Clearly the dividend's growing along with that 15 years increasing. That 24% dividend increase this year was insane. How does that compare to the company's 5-year average dividend growth rate? It crushes it, but it's insane. 11.91% 5-year average dividend growth rate. Absolutely wild what Kroger is doing.
So Kroger doubled their 5-year dividend growth rate with this dividend increase of 24%. And that has had a modest impact on dividend yield because, again, this company is also up 24% in the last year. So their dividend yield at the time of this video is actually only at 2.15%, but that is higher than the S&P 500 and still higher than your online savings account.
Yep. Let's summarize quickly before going into number 2. PE ratio, 12.39. Payout ratio, 26.6%. 15 years increasing that dividend. 11% dividend, actually 12% 5-year dividend growth rate, just announced a 24% dividend increase with a yield of 2.15%. I see exactly why they're on your list, Lanny. Tell us about number two.
Number two, guys, this is a company that's been on my watch list for a while. They were on my last month watch list. We've made a couple of videos about them becoming a high dividend growth stock, ? Guys, since that video, the stock price has dropped, I don't know, maybe around $28 a share, give or take. So they're down quite a bit. We're talking, call it 30%. They're down at least from that video. Bert, who is this stock that I'm looking at that we're both probably liking, that this could be a great opportunity possibly for you?
It could. We'll see if it is. LyondellBasell, ticker symbol LYB. After all these videos, I've finally learned how to pronounce their name correctly. It's about time. So yeah, you said it. Are they a dividend growth stock? We covered it in that video, so go there. So we won't go into too many details, but what did they do? They announced that massive, massive, massive special dividend that hit your brokerage account last week, Lanny, or was that 2 weeks ago that you got the payout?
A couple weeks ago, and man, that reinvestment was beautiful. I love it because it's reinvested back at around almost 5+% at the time that drip came. And guys, the dividend yield has swelled up even more on this dividend growth stock. Because guys, let's dive in. First off, they're trading at $89.24. So wow. That first metric, that price to earnings ratio, analysts are actually expecting. Yeah, hold your chair on this one. Make sure you have a lid on your coffee, or that you don't have a mouthful of beer right now. But they're expected to earn $16.78. So yeah, boom, that colon blow. So their price to earnings ratio is 5.3.
5. Yeah.
5.
5. Okay, let's go to the next one.
Value trap.
Speechless. Payout ratio. Let's go. All right. 5 PE ratio. Absolutely wild. Their dividend payout ratio, 28.37%.
And bro, we do this a lot. Even if you cut that expected earnings in half, their PE ratio is 10 and their payout ratio is only 56%.
Let's go to the third one. I don't know what really more to say. Dividend growth or history. All right. Ignoring taking out that special dividend, their 5-year dividend growth rate's 6 to 7%. So pretty consistent. Just a hair below today's inflation, but crushes the historical inflation that we've seen over the last 5 years.
Yeah. And they've been growing their dividend for 8+ years. And Bert, this part's probably making your eyes go, because what is that dividend yield as the bonus metric?
That yield is a juicy 5.33%. I mean, again, you just look at the numbers. Sorry, there's not much of a reaction because it's just kind of shocking what these numbers are looking like for LyondellBasell.
So yeah, in summary for LyondellBasell, a P ratio of 5, a dividend payout ratio of 28%, dividend growth rate of around 7%, growing it for 8 years with a dividend yield that is more than 2 times Kroger, is more than, you could call it 4 times the S&P 500, depending on where you're at with where their yield is. But if it's around 1.35%, definitely, 4 times the S&P 500 with a yield of 5.33%.
Both excellent stocks. We get why they're on your watch list. Lanny, what are you thinking for these two companies? Just give us your takeaway after going through them and talking through these metrics once again.
Obviously 2 different industries, 2 completely different stocks.
I would say so.
I own, over 115 shares now of LyondellBasell. The drip really juiced that up. So I own a ton of them, but it's hard not to just maybe grab a share under 90. So I'd probably grab one. Obviously, do your own research for all the viewers out there. Kroger, I own, a little over 170 shares. It's grown to be a larger position just because of the appreciation. But again, I wouldn't mind getting to 200 shares if it gets, I'm so freaking stubborn. If it gets around $45, I'd like, even though the metrics are great, it's not a bad stock to put in your portfolio. It's a good complement to a higher yielding one like LyondellBasell. So I'd like to see Kroger come down maybe a little bit. Maybe they come down with the rest of the market, but we'll see. What about you?
So the takeaway here is everybody is Lanny is stubborn. I don't know if anyone's picked up on that here. I'm kidding. I mean, I I'm gonna obviously I keep watching LyondellBasell. I just keep asking myself, when am I gonna finally initiate that position? It's hard. It with seeing the fall, I hadn't been paying attention to it, truthfully. Seeing it, it's gonna be hard to not do it, but I just gotta figure out what's gonna be the right way, time, and how much do I want to do if I am going to initiate the position. Kroger, it's awesome. I'm like you though. I'd like to see it come down a little bit before investing. But again, both are great stocks, and I could see why they've climbed quickly to the top of your watch list.
That's right, guys. So the question is for you. Are you looking at these two dividend stocks to buy right now? Or what other stocks are you looking at? Are there other stocks to buy in this volatile stock market? Are you putting money to work right now?
If you haven't already, everybody, I already told you once. Don't make me tell you again or a third time after that. Subscribe to our channel. Give this video a thumbs up. Thank you for the support, everybody. So far, do it. You're right, Lanny. We haven't done that in a while. Do it. Do it. Do it. All right, everybody. And again, keep buying dividend stocks, growing your passive income, and moving that cash from the sidelines into those income producing assets.
That was Bertha Hurt and Lanny from the Dividend Diplomats. Over and out.